Hello everyone and welcome back to the channel. In today's episode, I'm going to teach you how to mark your market structures or find your market structures and supply and demand using the smart money concept. Make sure you watch the entire video without wasting any minute. Let's go dive in. So first thing is, we're going to have to identify the direction of the market using the higher time frame like the 4 hours or the daily. Let's say we look for a bullish market or an uptrend. So here we see the price creating higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. Okay, so here market price is breaking structures to the upside. We're gonna have to mark our break of structures. We're gonna have to mark our break of structures. Okay, BOS stands for break of structure. So mark all your break of structures until your latest break of structure, which is right here. All right. On the lower time frame, every pullback that you see here is going to look like it's creating a low, high, low, low until it reverses back to the upside and continue with a higher time frame trend. Then what you do is you wait for the market. You go to the lower time frame and you wait for the market to basically create a low, high, low, low. Once you see the market coming back, you mark your demand zone somewhere around the higher low and the higher high. So basically the market is trading between this low to this high. So this is your trading range. And on the lower time frame, you have your low highs, lower lows, pretending like the market is going down, but it's just trying to align with the higher time frame trend. So now what you do is you wait for the change of character, retest, and then buy to target this structure here. So what you do is, once you identify the market coming down on the lower time frame and it hits your demand zone, okay, it hits your demand zone, you wait for a change of character back to the structure here, your demand zone, and then you target your previous highs there. Okay, and now we're gonna try to identify a downtrend or a bearish market. Let's say here the market is making lower highs, lower lows on the higher time frame like the 4 hours or the daily. Market is breaking structures. You mark your structures again, break of a structure, mark your break of structure here, another break of structure here, still going down, another break of structure right here. So here you have the price going down and breaking the previous lows, creating low highs, lower lows. Now you will mark your trading range. So the price is trading from this low high to this lower low, and then you got to go to the lower time frame, look for the market create a high, 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 low, pretend like it's going up, okay. Once you see the market going back up, to retrace and align with the higher time frame trend, you mark your supply zone. You find your supply zone on a downtrend market and a demand zone on an uptrend market. Around demand zone, you find around the higher low, and the supply zone around the lower high most of the time. So now that you mark your supply zone here on the downtrend market, and this is your lower time frame telling you, the market is going back to reverse, back to the supply zone, then you stay patient and wait for the price to give you a change of character. Okay, here's your change of character, CH. Once you have your change of character, you're gonna target your previous lows, which is here. Okay, Also, I just want to add this. If you want to save your breakover structures or your on your trading view template, just double click it, right? BOS, and then go here, save, BOS, and then save. Okay, so that next time you don't have to rewrite it again. So now that we identified how uptrend and downtrend looks like and how to find supply and demand on this illustration, we're gonna go to the real chart and show you in a real life market. So let's say here the market is creating higher highs, higher lows in an uptrend market. Okay, we have a breakover structure. Mark your breakover structure as usual. We have another breakover structure here. Okay, and then we have another breakover structure right there. So what happens here is, let's say the market was breaking structures to the upside, creating high highs, high lows. We have a high low led to a high high, breaking this structure here. So what you do from here is you're gonna have to go to the lower time frame, like the 15 minutes, 1 hour, and just wait for the market or the price to create the pullback towards to the downside, creating lower highs, lower lows. Okay, until it comes back to your demand zone. So you're gonna go to the 1 hour time frame. You're gonna go to the 1 hour time frame, or even the lower time frame, to find your demand zones. Once you find your demand zones, you mark it. Okay, this is your last down candle that created the price to the upside. Okay, so now what happens is, on the lower time frame, the price is going to create lower highs, lower lows, come back to the demand zone. Once it hits your demand zone, you scale down to the lower time frame and you look for a change of character, and then target the price here. Okay, over here we have another breakover structure. We have the market price here creating high highs, high lows, low, high, breaking this structure, giving us a break of structure. Okay, once you identify that, you wait for the market to create some type of lower high, lower low on the lower time frame to come back to your demand zone. So your demand zone could be somewhere here, this candle here, or it could be this area, which is your high low, and then you wait for the price to come back all the way down to give you some type of change of character, and then you target your next high, which is here. Okay, all right, you see the market come back all the way down, give you an entry, and then you target your next high. Okay, right there you go. All right, so this is how you identify an uptrend market. Always look for, identify the direction of the market, which is the order flow. So when you see here, market is going up, creating high highs, high lows, and then pull back to the downside, move up, pull back to the downside, move up, pull back to the downside, and then move up. Okay, so this is how you look for your uptrend or a bullish market. Now we're gonna try to find a downtrend structure. All right, in a downtrend market, we can see here the market is clearly creating lower highs, lower lows, breaking structures to the downside. We have price giving us a change of character here, because this was your last higher low, create a higher high, market came down, break the structure, went up to retest this zone, and then continue to the downside. Okay, now what we do is we're gonna mark our break of structures. We have a break structure here, 1 BOS. We have another break of structure here, 2. Okay, and then we have another break of structure here, market BOS. So market is creating lower highs, lower lows, So let's say you wanted to trade this breakover structure here. Okay, market give you a breakover structure to the downside. You mark your supply zone around the low high. You go to the lower time frame and you wait for the market to give you the price to give you some type of higher high, higher low, and then once it hits your supply zone, you wait for a change of character. You wait for a change of character and then move up to the downside, okay? Targeting your structure here. There you go. All right, gives you, a change of character, retest, and then continue to the downside. All right, another one here, the market breaking this structure here. Market breaking this structure. Once you broke this structure, you mark your supply zone somewhere there, and then you wait for the market to basically go back and give you some type of higher low, high high, low, higher high, higher low. Okay, back to your supply zone, change of character, and then target structure here. Okay, just like that. So this is how you find and mark your supply zones and your market structure. Nothing is very complicated. This is very, very easy. So just take it easy. Nothing is hard here. Keep practicing, keep marking your charts, and trust me, you're gonna get to where you want to be and you'll be very successful. You'll make it without any doubt. Thank you very much again. Thank you for watching the video. Make sure you subscribe to the channel. I hope you all have a beautiful trading year. Peace out.